The CARES Act. What you need to know.
Yeah, this is kind of exciting, Brian. So obviously we've had some huge legislation that just got passed this last week. And there was a lot in there. I mean, it's a big, huge, deep thing. And so we thought one of the things that we could do today for our Money Guy family is kind of uncover what are the things you need to know, what's the important stuff that you should pull out from this legislation.
And when we kind of look, there's so much in here, and I did a crazy deep dive. So just because we don't cover it today doesn't mean during the Q&A session you can't ask us even deeper questions, because we did break this into 6 primary individual benefits and 3 primary business benefits to try to keep this thing digestible, because we do want to make sure we save time to get to your questions. There is also, we're going to have a special episode coming Friday. We're about an 80% chance that it's going to be live, because we're still, because on planning things, because this is going to be what you need to know, and then Friday's live stream is going to be planning things that you can actually use. And here's why I wanted to kind of wait a few days. A lot of you guys are going to have questions about this, especially the business owners, our gig economy employees, self-employed, about the payroll protection program. I know a lot about it, but I want to know, what does the application go look like that is being sent out to the banks? What's the processes? What documentation are they going to ask you for? Because I know what they're probably going to ask for. I could, kind of assume, but I think it'd be better if we actually saw the documents, saw it. So we're kind of, it's going to be harder, because realize there's no safety net below us, guys. When we do these live shows, we are naked and ready for you guys to kind of lay us bare on what we do and don't know. So that's why I want to make sure we give you the best chance of understanding it. Also, I do want to kind of, because this is such a unique time, social distancing is in our vocabulary, and I think about Bo. Bo, how are you enjoying doing this quarantine with me?
It's been, it's like being with family.
It literally is, because, I mean, everybody should know, everybody is working from home. We have a skeleton crew of basically me and Bo and Reby, the producer, who's running the skeleton crew. We even have FTE Daniel working from home. If you see him in the chat room, he's there. And then we see our family, we see each other. We're trying to keep this thing, because we're taking it very serious, but it is one of those things where, what unique times, but we want to make sure we keep coming to you guys, because this information is that valuable. So let's I want to jump right in. I don't want to, because I know we're going to have a lot of people with questions. I know that going through the basic outline of those 6 individual benefits and 3 business is probably going to take us 30 minutes. So I want to make sure that I say, move through this quick enough so we can answer your questions. So let's kind of jump in. First, on the individual side, what everybody is going to be talking about are these recovery rebates.
That's right. And Brian, I think before we even jump into even talking about the recovery rebates, let's go ahead and outline the 6 things that we're going to cover. So we're going to talk about recovery rebates. We're going to cover retirement account distributions, charitable benefits, the legislation that was affected there, unemployment compensation, student loan relief, and then number 6 is going to be healthcare benefits. Those are kind of the 6 overarching individual benefits we're going to talk about. And the first one, just like you said, that's on everyone's mind is the recovery rebates.
Well, and here's the questions I've been getting so far from friends and family. So the government's going to give me some money? And I'm like, well, it depends on your income. We'll talk about that. And then the other part is, so how many checks are they sending me? Is this because I've heard, the Treasury Secretary talk about he wanted to do multiple checks. Is this going to be one check? So we kind of want to weigh that out. So let me kind of first know that this was designed to where about 90% of the population will be getting some money from the government. So you're probably asking yourself, well, am I part of that 90%, or am I part of that? Because that means there must be 10% that's getting excluded. Let's find out who they are. It's really, there's some income thresholds. This is what you need to understand, is that, and I'm going to go ahead and throw some of these numbers out. For a single taxpayer, the income thresholds don't start until you reach $75,000 of income.
So if you're single and make less than $75,000 of income, you will be getting a rebate check.
Exactly. We'll get to what do they base that off of in just a second. So follow me so far, though. $75,000 is the beginning. If you're head of household, because there's a lot of people that you're single, but you have kids in the house, you're trying to figure out, well, what does that mean for me? The number has been increased from 75 to 112,500 before you start phasing out of the rebate. And then for married couples, it's $150,000.
So that's where the phase out starts. It phases out from 150 on up. But if you want to get the full credit, it's for married filing jointly couples that make under $150,000.
So the question is, how much am I getting? So here's the number, and it's pretty simple. They did $1,200 a person. So single person is going to be $1,200. A married couple would be $2,400. And then all of your children that are under 17. They did not say 17 and under. They said under 17. So that means 1 through 16,
Yep.
or 0 to 16, I should say. You will be getting, as long as you claim them as a dependent, it will show up in there $500 a piece.
That's great. So you can see for a lot of families, this is going to be a nice little injection, nice little shot of capital. If you fall into the correct income threshold and you're, a family of 4, it's going to be pretty substantial. This is going to be cash flow that's going to come straight directly to you.
Well, and you're probably wondering, okay, so if I make over 150, if I'm a married couple, does that mean, how does this get reduced? Well, here's what the math they did. They did for every $100 you make over it, you lose 5% benefit or $5 benefit. So if you think about it in terms, if it's a 5% reduction for every $100 over. So if you make, if you make an extra $1,000, you know that 5% is
Sure.
going to be reduced off that. So that's why for like a married couple, it goes away around $198,000.
Yep.
But that does get extended out the more children you have. So that's why it's hard for us to give you an exact number, because if you have one child, your number is going to be completely different on the complete phase out than somebody who has 5 children.
Sure.
So just take that into account. That's a big part of it. So the next thing you're probably saying, well, I haven't filed a 2020 tax return because this is essentially free money towards 2020.
Sure.
I haven't filed a 2020. Well, no, nobody has. 2019, we're still pretty early in the tax season, so a lot of you have probably not filed 2019 as well. So that leaves, ding, 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 the government is going to be using either your 2018 or 2019, depending upon which tax return you filed.
To determine your income eligibility, that's where they're going to look. So
Yeah.
2018, if you've not filed, if you have filed, they're going to look at your 2019.
Yeah.
And these rebate checks, they're going to be taxable or non-taxable income when we receive them.
No, it is straight up not taxable.
Straight up non-taxable income, which is beautiful.
And here's a curveball that, because some of you a little later, we'll talk about it, you might make too much money, but maybe 2018, 2019, you're sitting here in 2020. I find this hard to believe because, 2020 is a rough year
Sure.
economically. But if you are somebody who made too much money in 2020, but your income was low enough in 2018 or 2019, there's no clawback provision.
Sure.
Meaning you get this money, you're not going to have to pay it back. So that's a pretty incredible
it's a big
thing.
benefit, yep.
And I would also, we'll get into the planning on on the Friday episode, but it is something, if there's a big variation between 2018 and 2019 that might impact those thresholds, we'll be getting into deeper details on that on Friday's episode too.
So the question is, okay, so you figured, okay, well, I know what size my family is, I know where my income is, so I know what my payment's going to be, I know what my stimulus check is going to be. How do I get it? Where's that money going to come from?
So if you've directly deposited the money previously, because about half of us do direct deposit on the tax returns, they're just going to go look at whatever you had on your 2018 or 2019 tax return, depending upon what was filed. They're going to directly deposit there. If you're on Social Security, they're going to directly deposit through wherever account you have attached to Social Security. If you get a paper check, normally when you file a tax return, you just get a paper check sent to you. They're going to continue to send a paper check to the last known address of record.
Yep.
And then that's what they're going to do for about half of you, just get a check in the mail. So it will be kind of, and this is something I will say that's going to be a little chaotic. Right now it's free money, but they will be sending out a letter letting you know, hey, we deposited the check. Did you get it? Or we sent you the check. Did you get it? And if you, by chance, didn't get it, they're going to give you a 1-800 number, and that's going to turn that free money into earned money, because anybody who sits on an IRS hold line, that it's not the funnest
It's
thing.
going to be a little bit of a wild goose chase. So we recognize that that's a little, it's not complicated, but there's some moving parts. So we thought one of the interesting ways maybe we could share with you how to think about this is in true Money Guide fashion, we try to do a flow chart. And so this is kind of what we came up with. If you made less than $75,000 your most recent tax year, or $150,000 married filing jointly, you will receive and keep the full recovery rebate, even if your income in 2020 exceeds. That's that no clawback provision that you said. If you made between $75,000 and $99,000 in your most recently filed tax year, or $150 to $198 for married filing jointly, you'll receive a partial recovery rebate, and it's reduced, just like you said, Brian, $5 for every $100 that your income exceeds. Now, this is where it gets a little interesting. If you made more than $99,000 in your most recent tax year on file, or more than $198,000, but your income drops in 2020, you're actually not, if your income drops, you won't receive a rebate now, but your rebate will be applied to your 2020 return. So it'll actually be a tax credit on your 2020 return.
Yeah, that's a good point, because there are going to be, I think this is a more realistic scenario, whereas you had really good income in 2018, 2019, 2020 has been a punch in the gut. Don't worry, you might not get the check right now, which I know a lot of you probably, you're in need of it, and that's going to be not the greatest thing. But it doesn't mean the money's gone forever. It just means when you file your 2020 tax return, if you fall within these thresholds, you will be able to go grab that money then. So it's less than ideal that it's not now, but just know that it's not going away forever, because I do think that's a more realistic thing.
That's exactly right.
Another thing I do want to address that I think I've seen all over the internet, people are asking, what about my college kids? What about those? Here's the thing. Realize this thing is very open. It's very open door. They're trying to get money to people. There's really the only way you don't get money is if you make over these income thresholds, or you're claimed as a dependent by somebody else. So a lot of you are like, well, wait a minute. I know since standard deductions have gone up, I'm not really using the exemptions don't matter anymore. So I'll just say my kid stands on their own, or maybe I did in the past, and they'll get this money, or I can quickly file a 2019 return. The only thing I'll say is realize, and I've used this for tax preparation for years, is everything's deductible until you get caught. And then it is a very scary thing to sit across the table from the IRS, because always, every bad movie out there with a mob or somebody else, or a loan shark, is the person is always like, man, why did I go and take that risk? Now I can't get caught back up. Here's my point with this. If your child stands on their own, meaning if you don't provide 50% of their living expenses, they can stand on their own. However, if you are providing over 50% of their living expenses and you're providing benefit, they are a dependent. So just be careful. Don't play reindeer games with the uncle, because uncle can take your stuff.
Yeah, I think if you're someone and you fit into the categories and it's plain and simple, black and white, by all means, go out there, get the money that's due for you, but don't try to game the system. I think what's going on is we're just in a really unique time. We're seeing some stuff that, frankly, we just haven't seen before. It's kind of a unique thing. And so what the government's trying to step in and do is exactly like we said, provide that injection into the system to hopefully help out. So if you can take advantage of it, great, but don't try to game the system and don't operate in the gray. Just try to operate in the black and white.
Yeah, when you're sitting across the table from the IRS, you want to be on solid ground. Quicksand does not serve you well. So let's move on. I want to talk about retirement account distributions, because there are, with this is why the government did this. They realized that a lot of people are going to be in some tough situations and they need liquidity. They need access to money. This is why, we do shows all the time talking about how valuable 3 to 6 months of cash reserves are. You're getting firsthand front row experience of why it's important, but maybe right now, this is not to club you over the head on how important it was to get that right in the beginning. This is better. Let's tell you what tools you have in the toolbox to make sure you have the money now. So here's what the government did. They have opened up the spigot to access to your retirement accounts. But this is not, I don't want to blow the retirement planning show, but be careful, guys, because this money is supposed to be for retirement. I want this to be something that if you really are in a panic state about where you're going to come up with money, then by all means, I understand the need for using this. But here's what they came up with, is that you are going to be able to, if you were impacted by coronavirus, and I will explain what that means, and it's a pretty lax policy. It pretty much, I think the argument can be made that most people are impacted and would qualify for this. But they're going to allow you to take up to $100,000 from your retirement accounts. It doesn't matter if it's a 401k, 403b, your IRA, and they're going to waive the penalty.
So you still have to pay ordinary income tax if it's from a pre-tax account, but even if normally it would have been subject to a 10% penalty, that's not going to be there.
And that, by the way, that's a huge deal, because you do see things like a lot of 401ks will have hardship withdrawals and things like that. That's just giving you access. You still usually have the taxes, you have the penalties, the 10% penalty. The government has gone above and beyond and said, we're going to let you have access to this. You'll still pay the taxes, but we're going to waive the penalties. We know how severe this is. And here's the other parts that's crazy, that it's kind of unique, and you can tell we're in odd times here. Typically, when you take money out of a retirement account, you have 60 days to get the money back in, where the government says, okay, no harm, no foul. It didn't actually occur. We're not going to count that against you as a distribution. No penalties, no taxes. But this, they've expanded. It's no longer a 60-day provision. They're going to give you all the way up until 3 years.
36 months.
3 years to pay the money back into the plan. That's unheard of. So it is going to require, it makes it complicated because you got to file amended returns if you ever need to go get that money back, because you will have to pay income taxes on your 2020 return. But here's the other part. If you do take this big distribution, they're going to let you spread the taxability over 3 years. You'll do it over 2020, 2021, and 2022. You get the option to do that. Now, of course, if your income's way down, you might want to just go ahead and pay the income taxes this year while you're in a lower tax bracket. But if your income, if you're still in a higher bracket, the deferral over 3 years is a pretty good planning opportunity.
So again, recognize if you're someone who's in this dire situation and you have to go access these dollars, this is a gate that's been opened, but it's not necessarily something you should take advantage of. Remember, the reason why you have for retirement assets is to provide for your retirement in the future. Don't think of this as a one-time access to the piggy bank to go just spend flippantly or make a poor decision, because if you do this, even though you can spread it out over 3 years, and even though you can get out of the 10% penalty, you might not want to borrow that money from your future self, because those retirement dollars are there to provide for future financial independence. And we believe that this too will pass. And when you get to retirement, you don't want to think back, man, I wish I wouldn't have done that thing in 2020 that caused my retirement to be very different than it could have been had I not used that emergency valve.
Well, and if maybe the distribution isn't right, they also really opened up the lending, the loans on your 401ks, your 403bs. Now, instead of, it used to be capped at, you could only do up to 50% of your vested balance. Now it's 100% of your vested balance. It also went from 50,000. It used to be 80%. Well, I'm getting sidetracked because there's so many numbers. There also used to be $50,000 cap on your 401k loans, unless it was unique for like a house or something like that. But now it's been pushed up to $100,000. So the 100% vested balance, as well as going from 50,000 to 100,000. You do have some opportunities to take some loans from your retirement plan as well. Hey, one last thing on the distributions, on these coronavirus distributions. Typically, from like a 401k, 403b, you pull the money out, your employers go withhold 20% automatically.
Mandatory withholding.
They will actually, that is being waived right now. It doesn't mean you're out of the tax woods, meaning you'll still have to pay the income taxes, but they're saying, hey, we want to get you as much money, because maybe that will keep you from having to pull as much money out of your retirement account, because 20% isn't automatically going to pay taxes on it. So that's an important part. But here's the big part. This is the big wowzer. I can't believe they've changed this, because it's a lot different. RMDs have essentially been suspended for 2020.
So for those of you that don't know, once you reach a certain age, and this is with the 2018 2018 Tax Cuts and Jobs Act.
The Secure Act,
Once you hit 72 years of age, you have to start taking out required minimum distributions from your IRAs, 401ks, retirement plans. Or if you inherit assets from someone else that's a non-spouse, you also have to start pulling out required minimum distributions out of those accounts under the old rules. The new rules have some slightly different things. One of the things that's really interesting is in 2020, for most folks, RMDs are completely gone. You can just skip this year, not have to take a required minimum distribution.
What I like about this is that we all know accounts are down right now. And I hate the fact that we're being forced to withdraw principal or corpus from our holdings, our principal investments, while they're down. It's like kicking them while they're down, basing it off all-time highs that we were at 12/31. This is good, so if you don't need the money, it's probably not a bad idea to defer taking this minimum distribution. And by the way, this is what's crazy. Is Bo kind of alluded to this? Inherited IRAs. You don't have to take a distribution. If you have like a trust or an estate that's subject to the 5-year rule, this year doesn't exist for that. They've essentially pulled this out even longer. It's amazing how they've done with this RMDs. So just pay attention. And by the way, a lot of you, because we have a few clients that might have taken RMDs in the month of January, February, even the beginning of March, and they're like, well, wait a minute, do I get to go back and put that money back in since the market is down? Normally, if you're within 60 days, we'd say yes, but that's it. But this year, we can actually say yes for anybody who's taken RMDs on their own money. You can go all the way back to January 1st, because now with this coronavirus distribution rule, we saw you have a period of time that's way longer than 60 days. You have 3 years to pay the money back. So take advantage of that. The only one that's kind of left outside in the cold is if you took an inherited IRA or retirement distribution, it's kind of hard to get that
You
money
can't go
back up.
back earlier in the
You
year to
can't
get
push that water back up the hill.
Yep.
And one last thing, and then we'll keep moving because I want to keep things going on. My procrastinators who, you're already ticked off that the Secure Act pushed it from 70 and a half to 72 before you have to start taking distributions. If you're one of the few people that deferred your first year, meaning you turned 70 and a half in 2019 and you're waiting until April to take your first distribution, the IRS has actually rewarded you for procrastinating. It's better to be lucky than good because they're going to not only let you not do the 2019 distribution, they're going to go ahead and suspend the 2020. So you got the last laugh on that. But that's probably a very small select group of people because most people I know don't want two years of distributions in one tax year because it pushes you on a much higher tax bracket. But I thought it was at least worthwhile in sharing.
So some huge opportunities there with distributions and retirement accounts. Just make sure, measure 2, 3, 4, 5 times before you take advantage or change some of these strategies because they can have long-lasting impacts.
So these next few should go pretty quick before we get into the business ones. Charity. I think this was really put in there more for the heart or the, of showing that the country's coming together in this crazy crisis situation we're in because they did put a $300 above the line deduction for everyone. What that means when you say above the line deduction, you guys realize part of the 2018 tax legislation is it pushed up the standard deduction on tax returns a lot higher than they were previously. So the majority of people no longer itemize.
That's right.
So you don't really get to take tax deductions for charitable contributions anymore unless your total deductions exceed the standard deduction. So since that doesn't happen, I think the government just they came together with this bill and they said, look, there's going to be a lot of charities that are hurting. There's going to be a lot of organizations that are going to help get us out of this, that we're all coming together. So let's put $300 in there per taxpayer that they can make the contribution, still take a deduction off of it. Now, it does have to be cash only. It can't be appreciated holdings. That's kind of unique, but they are. I think just honor that. And then also, here's another unique thing about charity. And I don't know who's going to do this, but it's still, I feel like it's worth sharing. Typically, you can't give away more than 60% of your total income or your AGI.
That's right.
They're letting you this year do 100%. So I guess all of our billionaires and other things, if they have cash sitting in a bank that they want to go put out there, this is, because that's a pretty big number. I don't know how many people will take advantage of that, but I felt like it was worth at least sharing. And that leads to unemployment compensation.
This is one I think that people are really curious about. I can already see, we're in the live chat. We can see that there's a bunch of questions coming in on this one. I think this is the one that people want to know the most about. Other than the rebate checks, they're really curious about, okay, what is the unemployment implications of what's happened in this legislation?
And look, I'll summarize it with this sentence and then give you some details. It's easier to get for a longer period of time, and it's more money.
Okay.
I mean, that really is because
crux of it.
Think about it. This is what was highly debated up there in Washington, is that most unemployment, every state, just for you guys that have never dealt with unemployment, it's a state administered program. Now the federal government has some, they interconnect just like with school systems and lunchroom money, but it's one of those things where your state is the administrator and facilitator of this benefit. In most states, it depends on which state you're looking at. Like, Bo, you shared with me, Tennessee is one of the lower ones.
It is.
The average was less than $300.
Yep.
So what they did, they came in and they said, we're going to boost whatever your state unemployment is by $600 for a total of 4 months.
So that's pretty significant. So you can think about even like somewhere like Tennessee where the weekly pay is something like $300 or even less than that. A boost by $600 is substantial. That's a big change in unemployment compensation amount.
So that's only for 4 months, but so there's also, they've added in there that there's going to be an additional 13 weeks. Most states' programs, it's a little different depending on which state, but typically it's around 26 weeks is how long you can do benefits. They've added an additional 13 weeks on top of it. But here's the part I think people are really interested in. Several things. Most people don't realize this, that if you're self-employed or you're the owner of a company, you don't get unemployment insurance. Because there's I think a risk they're worried about is that, well, if you determine if you're employed or unemployed, there's
just say,
there's
"I'm
a
not employed,"
danger
and go,
there that people are going to
"That's
take
a moral
advantage of the
hazard."
situation. There's a moral hazard, but we're in unique times, and we are trying to come up with with compensation or money, kind of Band-Aid money, to get people through this period where we're saying don't go to work. So they have actually done away with, you can apply for unemployment insurance as a self-employed individual under this new program.
Sure.
And you'll do that every state once. This is one of those gray zone areas that, since the states administer it, we'll have to see what comes out from last Friday's legislation at each state level on how the self-employed would go apply for this.
Yeah, this is one I think a lot of people have been asking me questions about based on their personal circumstance, and the answer is we just don't know yet. We're going to have to wait till we get a little more information to really see exactly how you're going to file, how it's going to play out. But this is something that's very unique and very different from what's been available to self-employed individuals in the past.
The federal government's going to backstop. They've basically told the states, hey, we'll go open up the money, so do this. The other part is the elimination period. Typically with unemployment, you don't get to apply for unemployment and benefits unless you've waited a week. There's a 1 week kind of sit out period. They've done away with that. You'll be able to file for unemployment immediately. You don't have to wait for that 1 week elimination period. The elimination period has been eliminated essentially. So those are all pretty powerful things.
And I think you mentioned this when you said 13 extra weeks of unemployment benefits. What's the normal amount of time that
well, it depends upon the state, but typically it's around 26 weeks.
Around 26 weeks. So now we're up to almost 40 weeks
Right.
roughly of unemployment benefits based on this legislation.
So a lot of there, but before you go file for unemployment, realize we're going to get to the business section in a minute. That payroll protection program is so powerful. If your employer laid you off, hang around for the payroll protection program, because you might need to call your employer up and be like, hey, did you hear about this? And you might be getting your job back before you go file for unemployment. Or
if you're self-employed, perhaps that might be a better opportunity than unemployment.
So don't go run to your state and start filing unemployment yet, because there's more is where we're going with this. So let's talk about student loan relief, because this is kind of unique. And this is one of those things where we talked about this in one of our previous COVID-19 shows, is that the government was basically, they came out originally through, I think it was executive order, that the president said, we're just not going to charge you interest for the next 60 days on your student loans, and we're going to kind of shut down on some of the collection methods and other things. Well, now it's been put into law. So what they've done for this year is that till September 30th of this year, September 30th of 2020, not going to be any interest on your student loans. Here's the other crazy thing. A lot of you guys who have student loans, but you're maybe working in healthcare or teaching,
education,
and, you're on a forgiveness program for that 10-year period where you're watching, and it's really important that you make all of your payments and not miss a payment, so you don't screw up the forgiveness program. This 6-month period is going to count towards that forgiveness. So, you don't have to make a payment, and they're still going to give you credit for being on time with things. So here's how to think about this. And I'm, planning-wise, I think this is important enough to share. You have to be proactive, though, because if you have an automated payment plan, and I love automated plans. I love automated savings plans. I love automated debt payment plans. It just makes sure nothing slips through the cracks. But this is going to be one of those unique times where you need to go do a manual override and basically shut down your automatic payments for the next 6 months, since you're getting credit anyway. Just please, please, please make sure you put some type of teaser in the system that says to go turn it back on after we get past September 30th.
And again, we're going to talk about on Friday some of the planning opportunities, because there's actually a great opportunity in this 6-month period. If you are someone paying your student loans, there's a lot of damage that you can do in a good way over this 6 months between now and September 3rd. We'll talk more about that on Friday.
But the big takeaway, you have to be proactive for yourself, because if you have automated plans, they're just going to keep rocking and rolling. We'll get to that, but no interest is being accrued over this period of time. Let's talk about qualified medical expenses have been expanded. This is going to move pretty quick. Basically, all they're saying is, and they went back to old school rules. You guys remember flexible spending accounts, HSAs, and other things used to let you do over the counter.
That's right.
I remember if you had extra money, you used to go load up on the allergy pills and other things like that. It's back to being part of OTC, can now count towards a lot of these qualified medical expenses. That's a good thing. Also, feminine products.
Feminine care products.
They wrote that into the bill, so now that stuff is considered qualified medical expenses, so you can include that. And here's another one that is big. Telehealth is having the best year ever.
It's a big, important thing.
Well, I mean, think about it, because now we're trying to restrict contact to people. telehealth is a great way because a lot of people, if you have some sniffles, this is what's so bad about what's going on with COVID-19 is that this is allergy season.
Yeah.
And, and Lord knows you don't want to have a sniffle right
Absolutely
now because you don't know, is this sniffle from allergies or is this the onset of something much more severe? And then you don't want to go to your medical provider who might be dealing with much heavier things right now while we have this outbreak. And you're like, I just need to go get this fixed, but I don't want to go into the doctor's office and have the exposure, plus also gum up the works. Telehealth makes a lot of sense, especially for our older population. That's why I think it's awesome that Medicare now covers telehealth. Also, you're seeing, and they wrote this in, and I thought this was a very optimistic thing talking about Medicare. When a vaccine's available, it's going to be payable. It's going to be paid for and covered for Medicare recipients. And then also, because once again, we're trying to restrict access or how much people have to go out, Medicare will also now cover 90-day prescriptions instead of you having to go every month to your drugstore to do this. So pretty cool to add those type of things to the plan.
So before we jump into the benefits or business, there are really 6 areas. We thought of the legislation in terms of 6 areas if you were an individual that you could benefit from. There's the individual rebates, retirement account distributions, expanded charity options, unemployment compensation, student loan relief, and then health care expansion of what qualifies as qualified expenses. So all of those are pretty significant, and I think most Americans will get hit by some piece of that somewhere, right? Some of them. And so now I think we ought to shift and talk a little bit about some of the legislation that's in there for businesses, because this has a big impact not only for employers, but could potentially have a big impact for employees, as we've had some.
Yeah, I hope in the live stream that a lot of people who don't, just because you don't own a company doesn't mean you shouldn't pay attention to this part, because if your employer's been impacted, maybe you can be the courier that lets them know, the Paul Revere of your firm, to lets them know what's actually going on. It just came to me. Come on, these are unique times. So the first thing, we got really some, here's the big one. I wanted to go ahead and not make you wait. I want to talk about the payroll protection program. And Bo, how do people typically come to us with this issue so far?
Yeah, so and here's, again, as we thought about this legislation, a way to break it down in a really easy, digestible way.
Look, I keep jumping right in. Do you see how I'm trying to, because I know you're going to pick on me about the time, so I'm trying to roll, and I never give you your summary slide, so I'll go ahead.
So there are sort of 3 things that we want to cover so you can kind of see how this legislation was laid out. The first is the Paycheck Protection Program. This is the biggie. This is the one that we're going to spend some time really diving into. There's also the Employee Retention Credit that we're going to talk about. And then the third one is the net operating loss rules. If you're a business owner, you're most likely familiar with what net operating losses are. Those have been loosened and expanded. But just like you said, Brian, the one that is getting, I think, the most attention, I know for me personally, the one that I'm having the most conversations with other business owners about is, in fact, the Paycheck Protection Program.
Well, but how is it presented to us? How do people come to us? Like, if you did a Google search right now, what are people asking?
They're saying, hey, well, how do I get that money, that loan that I don't have to pay back? Where do I get that free money that I'm not going to have to pay back?
It's a little counterintuitive. I want to go take a loan that I don't have to pay back. and look, this shows the severity of what we're facing, is because I think our government recognizes these are scary times. We are having to find compensation or ways to ensure that whole portions of our population are not just laid off. Because there's a lot of service providers that can't do business as well as normal things that we take for granted, that they just, business is not as usual. So, and this is why I think it's interesting. You've heard that this legislation was over 800 pages. Do you know what is right after the table of contents? It's Title I, and it's this section titled Keeping Workers Paid and Employed Act. So this is talking about the Paycheck Protection Program. There's a reason they put this first in there, and it's legit, guys. This is it's more of a grant than it is a loan. And let me explain what I mean by that. Here's what you have to qualify for it. Less than 500 employees, unless you're in this subsection within the NAIC, that allows the average employer in your industry is higher. You might actually be able to have higher than 500 employees. Also, restaurants, accommodations, hospitality type businesses where you have like franchises and multiple locations, you too, even if the total operation has more than 500, as long as each location doesn't have 500, you too can apply for this. So very liberal on 500 employees or less, and you had to be in business before February 15th.
Yep.
So that's the big part of it. So not a lot. I mean, that's a lot of companies.
It's a lot of small businesses. I mean, when I think about under 500 employees, it's a wide swath of small businesses all over the country. There's a lot of folks that are going to be eligible for this based on size.
So you're probably then, well, what's the benefit of this thing? How do you determine? So here's what, because remember, this thing goes back to why they call it the Paycheck Protection Program, is that you're going to be able to go look at the previous year's payroll and expenses for keeping your people there, and you basically get 2.5 months, 250% of your average monthly payroll looking backwards.
Yep, absolutely.
So that's a pretty powerful thing. And then, but they did put in there, because you're like, well, are there any catches here? There are a few catches. The catch is anybody's compensation above $100,000, you don't get to count that part. Now, what I've interpreted, and this is the part I've seen a lot of people asking, I do think the part of their compensation that's from $0 to $100,000, you do get to include in the average, but anything over the $100,000 will not be counted in that average.
And again, we're going to know more about this as we start seeing the applications, as we start communicating with banks to get the information to them. But I interpret it the same way as you, Brian. For everyone who makes over $100,000, the first $100,000 of the compensation will qualify.
And so that's the big part. You're probably like, well, and we'll get into what this covers and what's forgiven. But where do you go apply for these? Guys, because I immediately, when I first started hearing the rumor about this, I went to the SBA website, and I was like, there's nothing here.
What am I going to do? How do I do
this?
So
no, this is not going to be, it's just like you're going to get this administered, even though the SBA, the Small Business Administration, is the backstop and how the money's going to flow. This is actually going to be administered through your local banks and credit unions. So I would, and this is what I did. I reached out to my local business bank, and I said, hey, the company the bank we do payroll through and the operating account, I said, hey, by chance, are you guys go participate in the Paycheck Protection Program? They immediately wrote back, we sure are.
Yep.
So, I mean, it's one of those things. So you very likely could reach out to your local banker, and they're going to be where you get the applications. As Bo just shared, we don't know what those forms look like. We don't know. We kind of have some clues on what the underwriting process is. It's going to be very lax, by the way. You're not going to have to do personal guarantees unless it's over a certain threshold. The banks are going to want to be your advocate on this, because the way it looks like is they not only get a commission, they get to collect the interest, and there's even a hold harmless clause as long as they go through the right documentation with you. So your banks are going to want to be your advocates to encourage you to get this. I think if you're asking, well, wow, why is this? Because you don't typically hear about loans that are forgiven. How can this be? Guys, I really think this is a grant. Like I said, to keep people working. They want to ensure that we don't have a lot of unemployment, so that's why they encourage this.
And I do love, Brian, you said this isn't you don't have to do a personal guarantee like you often have to do when you take out a small business loan. You have to personally guarantee it. There is, though, going to be a requirement, we believe, a good faith certification that the loan is necessary due to COVID-19. So you are going to probably have to sign that there's some uncertainty in your business, which is why you're taking out this loan.
But that's still a lot of businesses, because, I mean, like, I'll use us as an example. We just took down brand new office space. Right now we're sitting there going, do we still need all these people? We're thinking about hiring in light of what's going on. Our revenue will be impacted. So there's a lot of uncertainty even for businesses like ours. So I think a lot of you guys will understand you're panicked. And I think the government, the other side of this is that they're trying to encourage, if you were with a growth mindset going into this crisis, hopefully you come out, because the government's going to be your partner in this, with a growth mindset. Because I think that is also part of it. So let's talk about this forgiven part. How do you turn this loan into essentially a grant by making the loan forgiven? What they've done is, if you're using this for payroll, if you're using this for rent or mortgage payments, utilities, health insurance, all that stuff will count in an 8-week period. You get to choose that 8-week period that you will get to forgive the loan, and you have to apply by June 30th, and that period is going to be between February all the way up to the end of June. So all that kind of comes into play. The maximum interest rate on these loans is going to be 4%.
So if you have some portion of it that's not forgiven for whatever reason, we'll talk about some of the reasons why it might not be forgiven. The loan on it is only going to be 4%, so it's not a punitive interest rate, even if you did have to repay some portion of it.
Yep, and then you're not even going to have to make payments for at least 6 months, if not even 12 months. The SBA is going to have a month to tell the public, is this going to be push off payments for 6 months or 12 months? That's coming. But you're probably saying, well, wait a minute. How do I not get the full 100% forgiven? There are a few catches. They're going to look at your FTE. Daniel made this bill because they look at your full-time equivalent and they try to figure out how many employees did you have last year, this time last year, how many employees do you have now? Assuming it's all the same, you should be fine. And assuming everybody made the same amount of money,
that's right,
you should be fine. You'll get 100% coverage. However, if you laid people off or if you gave people huge tax cuts, there will be by a proportionate percentage reduction in your 100% for forgiveness on the loan.
So I think again, one of the things we always think about, Brian, when we talk about tax policy or legislative policy is, okay, what was the intention here? Well, it's pretty clear. The government wanted small business to be able to keep their folks employed, keep their folks on payroll, and keep their folks earning the same standard of living that they were earning. And this is going to hopefully provide, again, 250% of average monthly payroll expenses. Hopefully it's going to give you that, again, just that little bit of cushion so that your business can stay economically viable moving forward. So if you are someone, and we even said this, we'll talk more in the planning show, who was recently laid off because of COVID-19 or was let go, you may want to go ring the bell and contact your employer and be like, hey, you should go watch this Money Guy episode because maybe it makes sense to bring me back into the fold so that you can qualify for this loan forgiveness.
That's written into the legislation, is that if you laid off your employees because you were panicking, you were freaking out, because I get it. There is a provision there. If you quickly go hire everybody back, you could still qualify for the payroll protection program. So it is one of those things, if you are one of these laid off employees, you might want to reach out, nudge your employer, especially if they're not the most business-minded people, and say, look, there is help out there, and this might get you. Because, Bo, you even had some friends that were really close to pulling the trigger on downsizing, doing some furloughs, and then you're like, whoa, wait. There's actually, in this legislation, nick of time, you don't have to get rid of your employees. We'll get you through this. This is a bridge, a Band-Aid to get you to the other side. So pay attention to that part. Lot of opportunities to get you back on your feet, hopefully, and keep this thing going.
I think this is going to be the most, in my estimation, the most impactful part of the legislation, because I think it is going to hit a lot of small businesses. Again, businesses less than 500. What I'm really interested to see is how efficiently it's able to be rolled out. Because again, the SBA is partnering with banks. So if you are someone, whether you run a nonprofit or a small business or fill in the blank, I would probably encourage you to go and start having the conversation with your banker now to say, hey, I'm interested in this. Hey, put me on the list. Hey, as you have more information, let me know about it. Because again, this is going to be I got to believe there's going to be people rushing for this.
And I don't mean to take some of the steam out of our Q&A show afterwards, but I will tell you, because when I read the bill, this section of the bill, I specifically went and looked. Not-for-profits, religious organizations, self-employed, they all are kind of built into this code. So I think if you've got a church, if you've got a not-for-profit school, if you're a self-employed individual, this thing actually, so before, and that's what Bo kind of alluded to it earlier when we were on the individual section talking about unemployment, how self-employed could take unemployment. You might want to look at the payroll protection program, because I think it could be more beneficial than just straight up doing unemployment. So just pay attention to that. Let's move on to, because I'm sure there'll be some questions in the Q&A on that. Let's go into the employee retention tax credit. This is one of those things that's kind of unique. Now I will tell you, I think the threshold for this is going to be substantially harder to reach. But this is essentially, you're going to get a tax credit against your payroll taxes for up to 10, if you have less than 100 employees, up to $10,000 per employee that you can do in tax credits. That's pretty powerful stuff, but here's the catch. You have to lower 50%, your revenue has to be down 50% for the quarter, or your business has to be shut down. If the government came in your area, did stay in place, and your business just can't operate, you still would qualify for this. It would be a tax credit against your payroll taxes But I will tell you, because we found also there's a lot of talk on the internet on this, and me and Daniel had
Went
quite a
back
few
and forth
discussions.
late last night
And then
on this.
Daniel whips out some code sections, and I was able to go in the bill and look it up. You don't combine the payroll protection program with this this employee retention credit. They don't let you double dip on that. It references the two code sections. So it's one of those things, but I think the payroll protections could be more powerful anyway.
Yeah, I think if you're someone who for some reason the payroll protection isn't there, or perhaps you just check the math and this makes more sense, then that's certainly an option. But the 50% reduction in revenue, I think, is going to be. I think if you're someone who's going to hit that, the odds are the payroll protection program is probably going to be a better thing for you.
Well, it's going to be more money because think about payroll taxes. Yes, they're expensive if you think about all the things you pay on payroll taxes for, but getting actual 2 months of employee compensation is going to be a bigger number.
A lot bigger.
And then, but I will think it's interesting that this, because when I first started hearing about the legislation, this is what I heard first before I heard about the payroll protection program. I thought it was interesting that as long as you hit that indicator of your revenues off 50%, you get to keep this coverage all the way through the end of the year, or reaching 80% of your revenue gets back up to 80% of where it was the same time last year. So it's kind of interesting. Let's talk about kind of closeout, and then we'll get to some question and answer. Net operating losses. This is a big deal. A lot of people, you're like, if you're a business owner, how does this come into play? Well, what's really unique about net operating losses? Sometimes when your business will have a bad year, and you'll have losses, and the government restricts how much you can use of those losses. And if the unused portion in the past, you could go back 2 years, and then they used to be only a few years forward, but now under the new tax legislation that went in, it was kind of infinitely in the future. But what's more powerful is if you can go and essentially file amended tax returns and harvest taxes that you paid in other more lucrative years or profitable years. That's more valuable to you right now, especially in these dark, crazy times. So here's what's really wild that they did. They changed it from 2-year look-backs on your net operating loss to a 5-year period, and they didn't just stop now. They said, okay, you can go back to 2019's tax return. You can go back to 2018's tax return. So if you think about it in terms of you can go 5 years back, if you have a business that's ever had negative year, if you have a negative year 2018, 2019, and now 2020, even though you can't file a tax return, so it's really 2018, 2019. You could go all the way back to 2013 to go file amended returns, apply the net operating loss, and then go get money back, get taxes. The government will pay you the money, give you a refund for those taxes you've already paid.
So again, what they're essentially saying is, okay, if for some reason this wasn't enough, and then this wasn't enough, and this was enough, if you are a business that's been hurt pretty bad, but in the past you actually did pay tax on your business, we're going to let you go back and recoup some of those taxes that you paid previously. Again, just another way to find capital to hopefully allow businesses to continue to run and continue to operate.
And this is one, all my real estate investors, you're going to want to pay attention to the NOLs because that's where it does come into play. They've also loosened up how much you can take on your passive losses. You know, usually there's some restrictions on how much passive losses you can take on things you've invested in. This has loosened that up as well. So the NOLs are going to be a way for you to go harvest cash flow or money, liquidity that you need right now based upon previous taxes you paid in more prosperous years.
Love it. So again, there are sort of three things that we think, if you want to think about sort of an outline for the business portion of this legislation. Payroll protection program, which is huge. You can go get a loan for up to 2.5 times average monthly payroll expenditures, and it can be forgiven if you use it for certain things. The employee retention credit, where you can take a credit up to $10,000 per employee off of your taxes, and then the net operating loss rules have been loosened. So some big overarching legislation, but it was deep. Like Brian, I think you've spent, I don't even know how many hours since it was signed on Friday, and even before that, because we kind of had an idea of what it was going to be. You spent a lot of time in this, so I'm sure that there are some questions some folks have that maybe we can speak to. But one of the disclaimers we probably ought to throw out there is there's a lot of stuff that we just don't know for sure yet.
Well, and that's a good segue into why Friday's show is going to be so powerful. Is I've already written kind of the show notes on the individual side for Friday, how you should plan, some unique things you can do to take advantage of, even some things you can do to make sure you get your recovery rebate if you're on the questionable side of things. There's definitely some planning strategies. But we are hitting the pause button because I want to wait to see some of these forms. I want to see what the SBA's, the guidance they're putting out so that you guys have more actionable steps that you can actually do. Because I'd rather measure twice, cut once, give you the right information. So please tune in Friday, keep this going because you're right, Bo. I feel like I know this legislation better than probably the guys that voted on it in Washington, D.C. I have gone through a lot of the bill. I've read every article I can find out there on it. So I think it is unique, and I think that's why we are going to be a resource for our listeners and the Money Guy family. And we get it. This is heavy, hard times. We don't need to be talking about Roth IRAs right now. We need to be talking about the CARES Act to get you the valuable information you need so you can make payroll for your employees or so the employees can know what's coming their way and get through these crazy times. So we're always going to try to be that resource for the Money Guy family.
Love it. All right, let's answer some questions. I've gone through, man, you guys are doing awesome because the questions are rolling in. Keep them coming. We'll go.
By the way, that was supposed to be 30 minutes. We are 49 minutes.
We didn't hit 30, but that's okay. I'll go as long as Reby will allow us.
Okay.
All right, so here's our first question. This is from Aaron. This is out on YouTube. And he said, so we asked this question early on in the show. He said, can you explain the PPP portion of the SBA loans for 7A and the CARES Act? And would it be right for a single employee company that is losing work due to COVID, or is it better to lay myself off? So I think he's asking this question. I am a sole practitioner, single owner. Did he say, he didn't say this business structure, but I'm the sole guy. Is it better for me to go apply for PPP, or is it better for me to lay myself off and go collect unemployment benefits?
Yeah, we actually looked at this, and that's a great question. I think that a lot of people, it's going to be a little bit of math, but I would say for the majority of people, the needle is probably going to fall towards the payroll protection program, and let me explain to you why that's the case. Is that unemployment is better, don't get me wrong, because we're essentially boosting whatever your state unemployment is by $600 a week, but more than likely, because the average nationally is right below $400, more than likely you're looking at right around $1,000 a week for a total of 4 months. That's good, but I bet if you were in a higher income situation with your self-employed or you're part of the gig economy, you might find that it's much more better for you financially to get that 2 months of payroll, because remember, you get to not only add, if you look at, you get to add the benefits like your health insurance cost, rent. I mean the rent, all those things. So you're going to truly get close to that 2.5 times your payroll if you once you add all the rent and other things in there. So I'm saying it's a math calculation, but I think for a lion's share of people, it probably will fall more towards the payroll protection program.
Yep,
by the way, did you see the lion call in there? Because I know. By the way, guys, Bo doesn't do pop culture, but all we've been hearing about is what's your buddy now?
Oh man,
Joe Exotic. Yeah, Bo is all about. I think if anything comes out of COVID-19 is that a lot of people are watching some Netflix and Joe Exotic.
That is 1,000% true.
Okay.
All right, Emily Crow asked a great follow-up question.
Sorry, you didn't count on it.
I wasn't planning on.
This is the problem with Q&A shows. You never know where I'm going.
Why would a small business take a loan to pay employees instead of having them collect unemployment? Here's the reason. Because the loan can be forgiven. Again, if you go listen to how it works, yeah, it's a loan, you're taking it out, but if it's used for certain expenses, it can be forgiven. So essentially, just like Brian said, it's more like a grant. It's more like free money. It's more like, here, use this to pay your employees. So that's the reason why businesses would likely do that rather than just laying off employees and having them go collect unemployment. Now, some businesses are going to be drastically changed because of this thing, insurmountably changed. And if you're in a business where like it will never be the same again because of X, Y, Z, perhaps you're still going to go through layoffs. Perhaps you're still going to go through reduction in force. And so perhaps you ought to investigate that. But I think for businesses that just need a little bit of wiggle room to be able to get through this storm, taking out the PPP loan is likely going to be the thing that you need to allow you to get through it.
No doubt. I mean, that's the big part. I think This is why, because it does seem a little counterintuitive leverage to get you through something. But remember, the way this was written, you're not even going to make payments for a minimum of 6 months. They've deferred the payments, and the interest, yes, will be accruing. But when you reach all the criteria that makes this a forgivable loan, you don't pay the interest. The actual federal government's going to pay to the bank the accrued interest to that point, plus the full loan amount, plus a commission that they're paying to the banks for facilitating and being the people that are going to make this happen. So that's why, as Bo said, this is more of a grant than it is truly a loan, but it is going to require you to do some steps to go ahead and be available. So I would go ahead, if you think that you're appropriate for this, go ahead and contact your local banker, because this is going to be a lot. As you can imagine, a lot of people are going to be interested in this. You're going to need to go ahead and get on the phone or email your banker so that they know that you have an interest in this, because there's going to be a lot of interest. This is kind of like here in Tennessee, you have to have a special driver's license. By the way, that's been pushed off for a while.
Okay, good, because it was October.
Yeah, it's been pushed off.
I've not gotten mine yet.
If you were smart, you try to get ahead of everybody because you know it's going to be a surge. You know it's going to be traffic. No, I have not. I mean, we're doing Money Guy shows, so it's but that's why I could use that as an example. It's because I had not done this the way I wanted to. But it's the same thing with this. Because I want you guys to have the tools to get in line, get the money, so you can keep your people. That's what the government wants, and that's what we want. Is we want to keep your people employed.
I know, Reeves, do you care if I answer some personal finance questions? Because these are just so good. These are non-COVID related, but there are two that came in. I'm going to read both of them. One is from Up Norther, and the other is from Tom. It says, if you were to acquire a lump sum of cash over $100,000 right now during the COVID-19 crisis, what would be the appropriate mindset to have? Buy investments now, dollar cost average, leave it in cash. And then Tom asked a similar question. Said, hey, I just had a large bonus hit my bank account. Should I lump sum in my post-tax account or DCA over the next couple months? If I am someone who's coming into a large sum of money right now during this, what's the appropriate way to approach that?
Well, I'm going to give a simple answer, but give some caveats that give it some teeth and also make it more dynamic. And the fact that we still love dollar cost averaging, because we are in a strange time here where anything you can do to make it systematic and take the emotions out of the process, the better served you are. But I am recognizing, I mean, look, if you have the S&P 500, now look, this is changing every day, but the market was down about 20% after the recent recovery. Dow was down 25%. I know we had a decent day yesterday, but it's still off a little bit. And we don't know how long we know that we're going to be in this kind of lockdown or quarantine process through the rest of April. There still could be the numbers are going up. This could get scary. So I don't want people to think, let's go throw it all in right now and then we'll be okay. You can do that. But I still like kind of coming up with an accelerated dollar cost averaging. Maybe you do 3, 4, 5 months, whatever you feel appropriate for you based upon your risk profile, your age, your goals. But maybe you do create some dynamic processes so that if the market goes down another 5%, maybe you accelerate one of those months of dollar cost averaging. Then if it goes down another 5%, you accelerate another month. So that way you have a way to kind of hopefully be buying, because we don't know where the market's going. We just don't. Anybody who's out there that's a talking head that says we have been through the worst, or they tell you that this thing's going to zero, they don't know any more than you do. So that's why I'm saying if you can create a dynamic system that takes into account all scenarios and makes you a winner, that's what I think you should take advantage of and do. What did I leave off? Because you and I have had so many discussions. You kind of are the author of some of these dynamic thoughts.
There's nothing I would add to that other than one of the other questions here was, hey, okay, well, I've got my 3 months of emergency reserves. Is that okay? Or if with any extra cash, should I start doing this dollar cost averaging thing? You have to do a personal assessment to figure out where your risk is right now. If you're someone who is at a risk of being laid off or furloughed or having an income reduction, yeah, maybe it does make sense for you to increase your emergency reserves a bit just to weather this thing. But if you're someone who's in a field where you're not going to be laid off, or perhaps you have a healthy emergency reserve, or you and your spouse are equally yoked in terms of income, or whatever the case may be, and you do have excess cash flow, yeah, get that stuff working, because there are some opportunities out there. There are some buying opportunities. But don't sacrifice the foundation trying to put the cherry on top.
Well, and also, not everybody's coming into windfalls. Maybe it's just that you have a cash reserves, but you've got some money on top of it that gives you a little margin. I always tell people a little buffer there. I increase my monthly. I buy. Okay, this is gonna sound crazy. I dollar cost average 3 times a month. I know. I don't know why it's not
Why
just
does that not
weekly at this
surprise
point.
me at
Well, it's
all?
just when things got set up. I have the first of the month, I have the 15th, and I have the 20th. Every one of those purchase dates is has been increased, and I think that's an opportunistic way also. Just hearing myself say it out loud, I probably should just go ahead and have weekly. I just ought to be buying weekly with the way
Well,
I do my
I
dollar
buy
cost
it
averaging.
2 p.m. on the 8th, and then
It does.
then
Saying it out loud.
approximately
But
1
this is,
p.m.
guys,
on the
I'm a
11th.
financial mutant just like you are. This is not just, an act that we do for the Money Guy Show. There's a reason that this has gone since 2006 is that we live and breathe and do this, and I think you can sense that.
Here's an easy one from Raw Dog. Hey, do we have until July 15th to put money into 2019 IRAs?
Yeah, this is because that came up in a previous show and I didn't have clarification. This is what I love about my team. Let me answer the question, but I miss my team. I really do, because this is one, I know we're all loving.
I'm here right now.
I know, but you're part of this. Is me and you essentially and my family. That's who I get to see in this quarantine. So to keep the exposure, because we want everybody safe and healthy, so everybody's staying home. But I do miss my folks for sure. So it's one of those things. Look, I got myself. Tell me the question again. You're gonna totally make fun of me. Quit. Don't do it.
So here's Raw Dog's question. Do we have until July 15th
Yes.
to put money into the 2019 IRAs?
Okay. Miss my people, because the answer came from one of the team members. The answer is yes. This has been clarified, is that you do have additional time to fund IRAs, HSAs, and things like that. So take advantage of it. I would say that while markets are down, assets are down, definitely be opportunistic with funding all those retirement accounts. Instead of calling it a 2020 contribution, go ahead, since you have the extra time, push it back to 2019, so that way you can go ahead and get 2020
Love
in as well.
Here's one from
Look,
Tim.
that was a win-win for you.
It
You
was
got to pick
unbelievable.
on me, plus I got some answers in there.
You started walking down this rabbit trail, and all of a sudden you started looking around. So where am I?
Well,
How'd
it's
I
just
get
easier
here?
to admit. I need you to read the question again.
All right, this is from Tim. He said, hey, what are some strategies to prevent my short-term market emotions from wrecking my long-term financial future? Tim, I don't know how old you are. What I found is generally folks who've been investing for a while, who've been through this, they kind of understand the way these things go. Yeah, we have downturns and we have really bad events, and we generally make it through it. But young folks don't necessarily have a context for that. So this might be the first downturn, bear market, fill in the blank of what we're experiencing. One thing is, I think you can flip your mindset. If you're still in the accumulation phase and you see all this volatility, you see this downturn, you ought to get really excited, because there are some fantastic values out there for you to go get. So if you are someone who can increase your dollar cost averaging or increase your 401k contribution, by all means do that. Then you'll actually be excited about the downturn, as opposed to thinking, ooh, I got to get out of this. Now here's the second one, and this one is a little interesting, because I would never, we're financial advisors who are constantly trying to tell our clients, hey, here's what's going on, here's where you are, here's what's happening, all these things. And we think that transparency makes all the sense in the world, and that's the way that you ought to view your financial circumstance. So I would never encourage someone, hey, don't look at your statements, don't pull up your account, don't pay attention to it. However, I have had a number of clients saying, hey, look, I looked at my last quarterly report, this thing started happening, and I've just, I've stopped logging in. I'm not looking at the monthly statements, not because I don't want to know what's going on, or not because I'm just going to stick my head in the sand, but I know that if I look, that little creeping thought is going to get in my head that's going to start freaking me out. And I found that since I've stopped logging in every day, and since I've stopped paying attention to every market movement, I have found myself to be happier. And I trust the thing that I've heard you say over and over and over: the plan was good before this thing started. While this thing is going on, the plan is still good. And as we get through this thing, the plan will still have been good. If you can have that mindset and don't let your eyes follow every single undulation, there's a chance that will help you stick to the long-term plan.
Well, I'd mentioned this. There was a New York Times piece that featured us in. It was like, this is your first downturn. What do you need to do? And I think hopefully Reby has put us a link up to that. If you go to moneyguy.com, I talked about in there actionable information versus unactionable information. And that ties into what you just said, Bo, is that a lot of people, you need to know how long you're going to be in this quarantine. You need to know, what's going on with being able to get food and other things like that, and protecting yourself. But hearing about the daily actions of the stock market, unactionable information because hopefully you've already had a plan or you've already made the adjustments you need to. So it's not the type of information that's going to do you good. If anything, you're going to outsmart yourself by having an emotional reaction that you'll come to regret in the long term. And then I can't help. I'm in the YouTube comments a decent amount, and I've seen 20-somethings post in there, man, I just got started investing. I've been watching y'all's content, but man, I'm off by 20% or so right now. There's a part of me that just wants the comfort. And then I see an old timer, you can just and they're like, what are you doing? I mean, you won't touch this money for 30 to 40 years. 40. You won't even remember this happening. So I know that sounds hard because it's the first time many of you, or if you're brand new to investing, have experienced this, but volatility really is your friend. In the long term, this is actually what does do the pruning of your garden, of building. If you think about your tree, you don't like this limb over here. You're trying to grow this huge live oak that the kids and the grandkids and the great-grandkids are going to grow on. You can do that, but there might be some things that you need to in the short term, it's going to pull back. But I promise you, this will just be a hiccup if you will just let your money do it. Keep driving through it. If you have a dollar cost averaging plan, just let the money keep rolling in so you can take the emotion out, let the systematic process do all the heavy lifting for you. Your older self will give you a huge bear hug if that's even allowed in the future. But it will definitely be excited for all the great decisions you made while you were young.
I love it. Here's one, and I always get nervous when I ask you a question I don't know the answer to, so here comes one. Get
good.
ready.
Good.
This is from Eric, but it's okay if the answer to this one is I don't know. Any clarity on when the check will be deposited, or just, quote, next 3 weeks? That's what, and he did air quotes. Or he actually did real quotes. I did air quotes.
Well, I really do think they have every incentive and encouragement to try to get this money in there ASAP. Mm-hmm. Now, it's the government. The government's not known for being lickety-split on many things, but if they could do it in 3 weeks, that will be, I put that squarely in the winning column because big organizations, because realize, they just don't. It takes, they've been bragging that they do tax, because you can still file your tax return right now if you're owed a rebate, and they say that you'll get the rebate within 21 days. So I'm going to give them credit. If they can do this in 21 days too, 3 weeks, because I think that's the guidance that they're talking about, I think it will be a positive thing. But I hear the same things you guys. I read the same articles, and they're saying within 3 weeks, hopefully you'll get your check. And then remember, after that, they'll be sending letters out to the people, to the old address of the address of record that they have. If you don't get a check and you know you qualify, they're going to give you this poor 1-800 number, and you're going to have to turn some of that free money into earned income by sitting on hold with the IRS.
Here's a really quick question, Brian. This says, what's the koozie say?
Oh, yeah. By the way, just to give you the rest of the story on this, we had a team that was supposed to go in April to one of the local universities here that we recruit out of. Well, it's not really local. We'll go to Kentucky University that we recruit out of.
Local-ish.
Yeah, and because we have several team members, great program. We'll say Western Kentucky. They probably would like the plug. Well, so we wanted to have a koozie or some giveaway because, how do you get young people, how do
give them something for free?
We used to sell credit cards back when I was in college by giving away a free bag of potato chips. We were like, let's make this a little better. So we came up with a koozie, a money guy koozie. You see the logo on this side that says, this $1 beer cost me $88. So we were trying to, 88 times over, trying to show the value of what $1. Now, can you really buy $1 beer?
I'm about to say,
not sure in these days and times, but
beer?
it made sense that the concept was, $1 cost me 88 in the future.
I love it. All right, here's one, and this is a good one. And okay, she's like giving me this number.
I know.
Here we go. This is from Pob. He says, all right, if you already have 3 months of expenses saved, would you recommend putting the stimulus check into my IRA? I don't know whether to further pad my savings or put it into an IRA. I have a government job stable. I think he's asking a really good question here. There's a chance a lot of folks that are going to be getting these rebate checks have made wise financial decisions. They have an emergency fund. Their job is not at risk. Their income is not at risk. So this is kind of like found money, new money. Family of 4, it's going to be pretty substantial if they qualify for it. What are some things that you should do with this money? Or what are some things that you can do with this money? Or What's a tool you could maybe use to help you figure out where this money should go?
Well, it's definitely respect the financial order of operations. We tell you guys all the time, respect the foo. It is one of those things where when this money comes in, if you go back and we have done shows where we say what to do with your next $1,000. By the way, it might have a year after that. We might say what to do with your $1,000 in 2019. I guarantee you, except for the contribution limits, it's probably pretty timeless advice. Yep. So I would treat this money, because you're thinking he's on the right mindset, is that if you have already got your emergency reserves, you have the basics covered, you're already getting your matching from your employer and those type of things, yeah, start being a little more opportunistic with it. Is there some debt I can pay down, some high interest debt I can pay down? Or is this money I can go fund a Roth IRA, HSA, that the depressed rates of the financial markets right now, when this does have its recovery moment in the future, actually will capitalize off of that. That is a great way to do it. So I would tell you, I hate to answer a question with a question, but I think there's just one more homework step, is you need to go watch our financial order of operations or some of the previous episodes we've done where what to do with your next $1,000, and it will lay all.
Friday, where we're going to talk about planning opportunities. So not just what was the legislation, but how can you use that for your personal finances to ultimately help you go beyond financial, go beyond common sense and lead to financial abundance. I got to get all of our taglines in there. We just so appreciate that you guys let us come and do this and kind of hear this from us. We're going to make it through this. We've made it through things in the past. We're going to make it through this thing. We don't know how long it's going to last. We don't know how deep it's going to go. But we know that sound financial management, keeping a level head, staying calm, making reasonable decisions are likely going to set you up well to weather this storm well.
Yeah, I do appreciate the CARES Act, the Coronavirus Aid, Relief, and Economic. All that. I love the people that must name this. They throw it out there. Hey, go get us a name. I do love that it's trying to keep people working. It's also trying to get money in the hands of 90% of the population. That hopefully, just like hopefully you got enough toilet paper in your cabinet and cupboardry, that you're not having to go to the store and buy it. This is hopefully fill the stockpiles so you can be prepared to hunker down, make it through this quarantine, and we're going to come out. I really feel confident, because one of the things, look, I hate how partisan and divided our country is. I do think that it goes a long way that this thing, everybody was kind of on it didn't matter if it was a Democrat, Republican, they all voted for this.
Yep.
It came together. That says a lot about how it's just kind of like a family. You fight with your siblings, but when the times get tough, you hunker down, you do what needs to be done. This will hopefully be the Band-Aid or the bridge that gets us to a better place in the future. Money Guy team out. Come back, tune in Friday. We're going to load you up. Also, don't forget to subscribe on YouTube. You're watching this live. A lot of you are watching this on YouTube live, so go ahead and ring the bell so you can keep getting notifications, because there's a lot of stuff going on, and we want to make sure that you're staying posted. And also, go out to moneyguy.com and give us an email address. We love sharing this information. Notice most people who are talking about the CARES Act charging money for these webinars. We're doing this for free. And by the way, YouTube will demonetize everything that says COVID-19, so we're doing this all. We think it's so important to get you the information. I'm not worried about the money right now. The good deeds, the abundant cycle will pay off in the long term, and we're going to keep it coming and paying it forward. Thanks so much, guys. I'm your host, Brian Preston, Bo Hansen, Money Guy team out.